Hello again, everyone. Thank you for joining us. This is Greg Towner with Parallel Portfolios for our market update for the month of September. Well, some of the things that we want to cover this month, we always like to start off with a review of the price trends. What are markets actually doing, both here domestically as well as internationally? So we're going to take a look at that. We want to do an update on the economy. What have we seen in the past? Where we think it might be going in the future? And then one of our favorite topics, investor sentiment. A little look at some of the key charts that we're looking at today around what investors are actually doing and thinking. So if we go ahead and start with a look at the S&P 500, and we've drawn this blue line as we have in the past, representing kind of a general uptrend. You can also look at the various other, red and green lines for moving averages. In general here, over the last year plus, a nice intermediate price uptrend. When we spoke with you last month, there was a little bit of the market starting to correct a little bit of increased volatility. Got us a little bit nervous just because it was starting at kind of that weaker seasonal period, the September period. But lo and behold, the market quickly recovered. And as we've seen, has actually moved to a new high rather quickly, just as it did the last handful of little minor corrections over the last year. So buyers have come in and bought the dip, as they say so far anyways. If we look at international markets, we've talked about how they were a little later to the game, but they've more than made up for it in recent months. Really nice surge in the uptrend. They also had a little minor correction back, mid-August, late August. But really not much to speak of at all, and has also moved to new highs. And no chart of the emerging markets here, but they've actually been the strongest out of those three equity groups. So price trends continue to remain healthy. Now let's look at a few economic charts. This is a composite chart of what's called the leading economic indicators. Some data points that try to look ahead and predict, so to speak, where or when a recession might be coming. Usually this cycle peaks out at least a year or so ahead of when a recession begins. So you can see in the past we've had some it started to roll over before the financial crisis. It started to roll over, a little after the tech bubble and so forth. Right now, as in recent months, it's continued to make a new high. Nothing that concerns us out of the leading economic indicators. Now, a lot of economic data actually looks backwards, of course, and there's, you can argue how relevant that is to stocks, but it is a good indicator of just overall what the economy is doing and what companies are doing. And so we look here at the final revision to US GDP for the second quarter. Actually was revised higher. Like to see that, like to see data increasing. So it's got up to about 3% for the second quarter. That's actually roughly in line with historical averages, so a little bit boost compared to where we've been recently. This number will be a little bit volatile, particularly as we start to factor in what happened with the recent hurricanes. Those will probably be a drag on some of the economic data, and they also make the data pretty noisy in the months ahead. So that we'll have to keep in mind. But for the time being, US GDP coming in pretty healthy. Speaking of healthy, the job market, really strong. In July, record number of job openings. Places are just trying to hire, trying to find candidates. The job market continues to be probably the strongest aspect of the economy as a whole. So we're happy to see that. Like to see companies boost wages a little bit more. That might draw in a lot of workers. But by and large, the job situation is one of the healthiest things. That brings us to our look at investor sentiment. There's a lot of different ways to measure in sentiment, and it seems like there's increasingly numbers every year. A lot of it is probably noise, but this is one survey of many. This was done by a Gallup investment survey. Basically, they found that a recent investor optimism was as high or higher than it's been going all the way back to the tech bubble of the 90s. So, surveys like this do give us a little bit of pause. There's some others that are also showing similar exuberance. So we don't like to see that from a contrarian perspective, because at some point the sentiment gets too extreme. But we also like to look at, not just what investors are saying in surveys, but also what they are doing. So this was a really interesting chart, and it's a lot going on here, so bear with me. But this looks at households with incomes between $100,000 and $200,000, so pretty healthy earners. By and large, their stock market participation on average across all states was actually less than 50%. And all the blues All those various shades of blue are basically in the low 40s. And you see all these different grays, they're in the low 30s. So these fairly high earners most of which should have the willingness and ability to be large participants in the stock market, just are not. So there continues to be a little bit of difference between what investors are saying they're doing with their money and what they're actually doing with their money for whatever reason. So where does that bring us? Stock price trends continue to remain strong. We are still in that kind of seasonal weaker period that we've talked about. That hasn't been a problem of yet, but we'll continue to monitor that. The economy continues to chug along pretty well, especially the jobs. You could argue we're in a little bit of a sweet spot with the economy in the sense that it's fast enough to keep us growing, but not too fast where the Federal Reserve is quickly raising rates. So, so far so good there. Sentiment we just talked about, it's increasing. Consumer confidence and investor confidence is getting up there a little bit, but it's really only most useful at real extremes, and so we don't think it's overly dangerous at this point in time. So that's our update for September. If you have any questions, of course, please let us know, and we look forward to seeing you and speaking with you soon. Thank you.